Greetings, I'm Brooke Lehrman, Maryland's 34th Comptroller. Thank you so much for joining us today for this webinar discussing the tax law changes resulting from the 2025 BRFA passed by the General Assembly. Let me start by saying thank you for doing business in Maryland and thank you for joining us today. Our tax system is one of voluntary compliance, and we are doing our best to make sure that you and everybody else who's affected by any changes in the tax law have the information that you need to comply. Since the end of session, our agency has been hard at work implementing these tax changes that the General Assembly passed during this year's legislative session. The Office of the Comptroller of Maryland has a long history in providing timely updates to Marylanders, informing them of tax changes and updates. And I'm pleased to continue this tradition with some added features, including these interactive webinars, in addition to public outreach efforts, FAQs, one-pagers, and other opportunities our agency is creating to ensure that you have your questions answered. I know that this kind of change can be intimidating, especially if your business is implementing a new tax for the first time, but we're here to make sure you have all the tools you need to make this process as easy as possible. To ensure that you can follow our progress and get further updates, we've created a web page on our new website, marylandcomptroller.gov. This page is dedicated to tax updates from the 2025 legislative session. There, you'll find a recording of this and all other webinars and other important updates from our agency regarding these changes. Thank you again for joining this webinar, and thank you for doing business in Maryland. Your success is so important to us. Our teams are excited to delve deeper into these topics, update you on the process so far, and answer your questions. With that, I'll turn it over to the team. Please stay in touch.
Hello, everyone. Thank you for joining our webinar today to discuss state tax updates from the 2025 session of the Maryland General Assembly. A few quick housekeeping notes before we begin. First, the information we're going to be presenting today is the same as has been presented in the other webinars earlier this week. So if you have attended another one of those webinars, you don't need to attend again unless you would like to. Also, since the end of the legislative session, we've been collecting questions from stakeholders about the tax law changes, and we have done our best to incorporate answers to many of those questions into today's presentation. Additionally, we've created a page on our website, marylandcomptroller.gov, that's dedicated to providing information about the law changes. Some of it is posted now, and there will continue to be additional information posted. Right now, it does include draft regulations regarding sales and use tax and some other guidance. Coming soon are a more fully fleshed out question and answer document that will incorporate not only what we've received, but some of the information questions that have been posted during these webinars. While we're not able to answer questions directly during today's presentation, please feel free to use the Q&A feature if you have a question that is not addressed, and we will incorporate those questions as we are able into future updates on the Q&A on our website. Please remember, do not include any confidential or proprietary information in the Q&A or the chat. And now on to the updates. Just to give you a little brief rundown of our agenda today, I am going to speak briefly about some of the income tax changes that were in the BRFA, particularly focus on those that are impacting tax year 2025. And then we'll move on to the sales tax changes. I'll be covering in the income tax, I'll be covering the tax brackets and rates on high income taxpayers, changes to the standard deduction and itemized deductions, and we'll explain the new capital gains surtax. And then moving on to the sales and use tax, we'll be talking about the expansion of the sales and use tax base through the addition of new taxable services. We've got a 3% tax on the sale of data or information technology services and also software publishing services. We understand that there are many businesses in the technology field that may never have had to charge or collect sales and use tax before. I will go talk a bit about sales and use tax generally. I know many of you practitioners will be familiar with this, but in case you have clients who are not, maybe you'll find some helpful tidbits in here. including the obligations of sellers and buyers. I'll talk about the effective date of the legislation and how that impacts contracts that are in progress and subscriptions. And I'm also going to cover some special situations, including exemptions, and then round out the sales and use tax portion with some updates on items other than technology. And finally, I'll be turning the presentation then over to my colleague who's going to share practical information on opening a sales and use tax account in Maryland Tax Connect, which is our online portal for filing and remitting the sales and use tax. So first up, we've got the new 2025 brackets and rates. Just a note, unless I specifically state otherwise, the income tax changes that I discuss here today, they are all applicable beginning with tax year 2025 and forward. So these changes came to us in House Bill 352, the Budget Reconciliation and Financing Act. For tax year 2025, the top marginal rate increases and there are 2 additional brackets and tax rates added. So what is the current top rate, the 5.75% rate, is capped at $500,000 for single, married filing separate, and dependent filers, and the cap is $600,000 for joint filers, head of household, and qualifying surviving spouses. You can see there's now a new 6.25% rate and the caps there. And then we have the new top marginal rate is 6.5% for filers with Maryland taxable income in excess of 1 million or 1.2 million, depending on filing status. The law changed the maximum rate that a county may impose. It's now been increased to 3.30%. Also, interest for the underpayment of estimated tax is waived for tax year 2025 if a taxpayer's underpayment would not have occurred but for the increase in the income tax rates. So that could relate to either these new brackets or if there are any county increases. Next, we'll talk about the standard deduction changes. The minimum standard deduction is increased to $3,350 for individual, married filing separate, and dependent filing statuses. And then $6,700 for joint, head of household, and qualifying surviving spouses. Those are significant increases over the 2024 amounts where the minimums for 2024 were $1,800 and $3,650 respectively. The phase-in of the deductions is eliminated. So now everyone with the same filing status who's claiming the standard deduction will receive the same amount regardless of their income. We'll talk about itemized deduction changes next. If you itemize on your federal return, you are permitted to itemize your deductions on the Maryland return. However, beginning with tax year 2025, itemized deductions are now phased out for high income taxpayers. The thresholds for that phase out begin federal adjusted gross income exceeding $100,000 for married filing separately and $200,000 for all other filing statuses. And the way that the phase out works, the amount of itemized deductions that's otherwise allowed is reduced by 7.5% of the amount of federal adjusted gross income in excess of the applicable threshold. Next, for the capital gains surtax, the BRFA imposed a 2% surtax on net capital gain that's included in in Maryland adjusted gross income if the taxpayer's federal adjusted gross income exceeds $350,000, excluding gains from sale of the exceptions that are listed here on this slide. A couple of notable ones just to point out, exception for income from sale of a primary residence for less than $1.5 million, as well as assets held in certain tax advantage benefit plans or retirement accounts. The net capital gain in the BRFA is described, it's the amount that is as defined and determined under the Internal Revenue Code. So Maryland is not creating its own definition. We are conforming there. As I mentioned, the income threshold for this the capital gain surtax to kick in is $350,000, and it's the same for everyone regardless of filing status. The new definition of state income tax equals the Maryland taxable income multiplied by the applicable rate. So that's what we've known to be the state income tax up till now, plus now the capital gains surtax amount of any. So those two together will be the new state income tax amount. Surtax will apply to capital gains that are passed through to individuals from pass-through entities and by fiduciaries to the beneficiaries. So to that end, Form K1 will be updated, and the payers will need to indicate the amount of capital gains that is being distributed so the recipient can report accordingly. Now I'm going to move over to talk about the sales and use tax, specifically the data or information technology services and software publishing services, and exactly, what is taxable beginning on July 1st. So the BRFA created new taxable services at the 3% rate. These services are described as data or information technology services that are described under NAICS or NAICS sectors 518 or 519 or subsector 5415, and also system software or application software publishing services described under NAICS subsector 5132. And those are all subject to the sales and use tax effective July 1st, 2025. The services that are subject to the tax, they are, as you've just seen, defined by reference to the NAICS sectors. Now, NAICS stands for North American Industry Classification System, and the law spells out that it's specifically the 2022 edition. Any services that meet these descriptions are taxable, whether or not a business is reporting these sectors as their primary business activity code, or if that is a NAICS sector that is assigned to a procurement or a contract. It really gets down to, is the description in NAICS matching a description of what is being sold. You can visit census.gov/NAICS and enter the appropriate code in the search field if you're looking for more details. I've got a little snip there at the bottom of this slide just to show you what it looks like. Remember, you are looking for the option that says 2022 NAICS search. And next slide is if we have entered, just as an example, 5415. Then the next screen that would come up on that census website, you would see a list of activities that are included with their related subsectors. So you see them there. And I've highlighted everything that you see highlighted on the left. That is actually a link that you can click on for additional information about those particular items. So if we clicked on the link for subsector 541511, which is custom computer programming, then, for example, you would see this list of activities that are all of the included activities within custom computer programming services. And folks, can drill down to see the details and see if those are aligned with the particular services that they are selling. Now, we don't expect everyone to have to go to the census website. So to assist taxpayers and practitioners, we have taken the activity descriptions from all of the relevant NAICS codes that are listed in the bill. We've included those in our emergency regulations and other guidance that's going to be available at marylandcomptroller.gov. We are also listing all of those activities in the instructions for the sales and use tax form, the 202 instructions. So they'll always be available whenever anyone is completing the sales tax form. We've had some questions about what qualifies as an IT service and what is a digital product and a difference. So we're encouraging folks, check the list of services, be that, on our guidance, or you can go to the census site, either one. If you are going to the census site again, just make sure you're using the 2022 edition. But for example, if you're charging for packaged computer application software, then as of July 1st, 2025, that seller is providing a taxable service. Or if you are purchasing it, you are buying a taxable service. And after July 1st, 2025, you should expect to see a line on the invoice of 3% sales tax on that. We've been asked if you can rely on a NAICS code if it's being used in another context to determine taxability, such as when it's entered on a tax return under that primary business activity code. So the answer there is no. Businesses may use a primary business activity code to describe what they do generally, but in determining taxability, need to check what is being sold against the list of services. Again, if you're using the census list, make sure you're using the 2022 edition. Don't just rely on codes that you may have been using for years without checking them. For example, if you do a quick web search right now for software publishing and NAICS, you're going to see a lot of results that talk about subsector 511210 for software publishers. However, 511210 is no longer a valid NAICS code in the 2022 edition. Instead, software publishers have been updated. That's under 5132 in the 2022 edition, and that is one that is included in this bill as description for taxable service. So again, really the question that you want to ask either your clients or if you are purchasing services, the question is what that you are being charged for any of the listed descriptions under these subsectors. Who has to collect and remit the sales and use tax? The legislature did not change the foundational sales and use tax laws that we're all familiar with when we buy tangible goods. What they did in the BRFA here was merely expand the base by adding new services to the existing list of taxable services. And I think that's important to understand in terms of applying the existing law and the regulations. Excuse me. Comptroller's office isn't breaking any new ground here, but what we're trying to do is assist taxpayers in understanding how those laws apply to the sale of data or IT services and software publishing services. Many of you are going to be familiar with these categories, so I'll just run through them briefly, but we know that vendors, also known as sellers, but they're called vendors in Maryland law, who are selling or delivering tangible personal property, digital codes, digital products, or taxable services in Maryland, must register for a sales and use tax account, and they are required to collect the sales and use tax on a retail sale unless an exemption applies. So this is going to apply to in-state sellers who are selling to a Maryland buyer, out-of-state sellers who have physical presence in Maryland, such as if they are sending employees into Maryland to perform a service, and then remote sellers where your Wayfair thresholds are going to apply. There's no physical presence in Maryland, but we know under the Wayfair decision, if they're selling to a Maryland buyer, the seller is going to have an obligation to collect if during the previous calendar year or the current calendar year, they meet the following criteria. So that's gross revenue from the sale of tangible personal property or taxable services delivered into Maryland exceeds $100,000. Or if they make sales of tangible personal property or taxable services for delivery into Maryland in 200 or more separate transactions. So again, important to note there, this part hasn't changed. Those Wayfair thresholds haven't changed. Taxable services was always in there. We just have some new taxable services added to the list. Important to note, because we've gotten this question from some folks, what if I am a seller in Maryland making sales to customers outside of Maryland? If the sales are to customers outside of Maryland, you do not need to charge the Maryland sales and use tax. You may need to charge sales and use tax depending on the law in the buyer's state if they also have similar wayfare provisions. So you need to check into that. These are some of the high level bullet points. Again, I know most of you on this call are probably familiar, but just to let you know what we are sharing with some of the other folks in webinars that may not have been familiar with sales tax, explaining that vendors have to have a sales and use tax license that can be obtained by completing the combined registration application at mdtaxconnect.gov. There is no fee to apply for the sales and use tax license. Explaining that the vendor is a trustee for the state and is liable for the collection of the sales and use tax for and on account of the state. Tax is generally due at the time of the sale. The due date for the returns, the 20th of the month following the month when the sale is made. Explaining the timely payment discount. So there's the credit of 0.9% of the gross amount of the tax remitted, up to a maximum of $500 per return, which is available to them if the sales and use tax is remitted on time. And that's to just help businesses defray the costs of compliance. Also letting folks know that interest and penalty and late payment penalty will apply if the tax is not remitted timely, and that certain officers and individuals, responsible individuals, can be held liable for payment personally if the sales and uses tax is not remitted to the state. Next, I just want to show a couple of snips. We have updated the sales and use tax form 202, and I realize this may be a little bit blurry. I apologize, but wanted to just communicate that the gist of this is there are new lines for reporting the sales of data or IT services and software publishing services, as well as the actual tax collected. Those are going to be reported now on line 16 and 16A. And then the taxable purchases for these services for use where the tax was not paid to the seller, those are reported on the new line 32. And we have, of course, on the sales and use tax form, both the sales and the use, because we know a business can be both a seller of services and a buyer of services. So who pays the tax? Buyers responsible for paying the sales and use tax in Maryland. Buyers typically paying the tax to the vendor who collects it and remits it to the state. However, if a vendor fails to collect the sales and use tax, buyer using the tangible personal property, the digital code, digital product, or the taxable service in Maryland is responsible for remitting the use tax to the state. And again, they would do that on that new line 32 of the return. When is a vendor going to fail to collect the sales and use tax? For one example would be, as we discussed, in that remote seller situation, perhaps that remote seller is not meeting the Wayfair thresholds, that they have less than $100,000 in sales per year and fewer than 200 separate transactions. So they may not be required to collect the tax. However, a buyer in Maryland would be required in that instance to report the use tax. I want to talk about the effective date of the legislation and how that impacts certain contracts and subscriptions. Contracts for sales of digital or IT services and software publishing services that are entered into prior to July 1st, 2025 are not subject to the sales and use tax. Proper records must be maintained regarding the date and terms of sale if no sales and use tax is collected. However, if the delivery and payment is going to be made after July 1st, 2025. However, tax is due on subscription, lease, or other similar periodic payments that are based on a subscription period. And that's regardless of the length of the subscription or the lease or the date the subscription or lease was entered into. Each subscription payment period is considered to be a separate sale for sales and use tax purposes. Payment for the new taxable services with subscription periods due on or after July 1st, 2025 are subject to tax at the 3% rate if they are a subscription for one of these taxable services. So example there, if you are currently in, say, a software subscription that is due with a payment on a monthly basis, your May payment, there is no tax on that. The June payment, there is no tax, but then the July subscription period, that should include a 3% sales tax, and for periods after July as well. Next, a contractor who purchases data or IT services or software publishing services after July 1st, 2025, in order to perform a service that is delivered as part of a contract that's entered into before July 1st, 2025, they must pay the 3% sales and use tax. In that scenario, the contractor's cost of performance has increased. So just to explain that one a little more, contractor bids and is awarded a contract prior to July 1st, 2025, but in that bid, they have estimated their costs. But if they have only estimated, they have not engaged subcontractors, or if they've not entered into any of the contracts to purchase the services that they will need to do their job. And if they don't do those things until after July 1st, 2025, those are new sales at that point after July 1st, 2025, and that's why the tax will apply there. And that's why we're saying in that scenario, the contractor's cost of performance has increased. We'll talk about some special situations as well. There are two brand new exemptions to the sales and use tax that were created in the BRFA that are specific to the sale of the digital or IT services and the software publishing services. The first of those is sales of cloud computing to cybersecurity businesses. The second is sales to or by certain qualified companies located in the University of Maryland's Discovery District. And then, of course, all of the additional exemptions that are already existing in the sales and use tax law, fact specific, but they may apply as well. So, for example, sales for resale, if the buyer intends to resell the taxable service in the form that the buyer receives it or is to receive it, and has not used the service themselves, that remains available, as well as sales to charitable or nonprofit tax exempt entities. In that scenario, the vendor is not required to charge tax if a buyer presents a valid exemption certificate. Can't be an expired certificate. Reminder, exemption certificates for charitable and nonprofit entities are valid for a period of 5 years. They must be renewed prior to expiration. Sales and use tax exempt certificates for government entities, however, do not expire. And if a vendor's presented with one of those exemption certificates, they are not required to charge the tax. The law also created a new tool for us. It's called a multiple point of use certificate. We call it an MPU for short, multiple point of use certificate. May be presented by a buyer who determines at the time of sale that the service that's being purchased is for use both in Maryland and outside of Maryland. The buyer would need to submit an application to the comptroller to use an MPU. And if approved, when the buyer provides the vendor with an MPU certificate, the vendor is relieved of their responsibility to collect and remit the tax. This shifts the burden to the buyer to remit the use tax for use in Maryland by the buyer or one of their affiliated members. Also in the BRFA is a provision, if a sales and use tax rate higher than 3% could be applied to a sale of tangible personal property, a digital code, digital product, or a taxable service, then the higher rate shall apply to the sale. So an example here, if we're talking about sales of software as a service or SaaS that is sold to an individual, that is already taxed at 6% as a digital product. And currently SaaS that's sold for enterprise systems is exempt from the definition of digital product. And that exemption remains in place. It is not a digital product if it is sold for an enterprise system. However, effective July 1st, enterprise SaaS is one of the new taxable services under software publishing. And so in the enterprise scenario, it is subject to the 3% rate. So what this provision means here, if it could be taxed at a higher rate, which is the sale to the individual because it's a digital product, that will remain taxable at 6%, the sale of SaaS to the individual, even though that same product this may be sold in an enterprise scenario at the 3% rate. Next, just a few miscellaneous other updates in the sales tax front from the session here. And then I'll add a couple other non-sales tax ones. But first, the sales and use tax rate for adult use cannabis is increasing from 9% to 12%, effective July 1st, 2025. It also exempts the sale of cannabis between a licensed cannabis business and a registered cannabis nursery from Maryland sales and use tax. The B2B exemption previously was just between licensed businesses. Nurseries are not licensed, but they are registered. So this is including the nurseries in the B2B exemption. Cannabinoid beverages are excluded from the definition of food for sales and use tax purposes. And so therefore they are also taxable at the cannabis rate. There were a few repeals of exemptions from sales and use tax. Snack food from vending machines, that exemption is repealed. However, the exemption does remain in place for milk, fresh fruit, fresh vegetables, or yogurt that's sold from a vending machine. The exemption for photographic material is repealed, as is the exemption for custom computer software. Obviously, the custom computer software had to be repealed because that is going to be taxable under the 3% rate as a new taxable service. There was also a restriction added to the exemption for the sale of precious metal bullion or coins, and that is restricted to sales that are occurring at the Baltimore Convention Center only. If those sales take place anywhere else, then the exemption from the sales tax will not apply. And then a couple others, I apologize, I don't have a slide for these, but we have Senate Bill 295 and House Bill 6634. This established an income tax reconciliation program, which allows justice-involved individuals who are unable to file a state income tax return while incarcerated to establish payment plans and receive a waiver of accrued interest and penalties for tax years 2025 through 2029. The comptroller is required to collaborate with Department of Public Safety and Correctional Services, as well as judiciary, to develop a related awareness campaign and adopt program regulations, which can include income eligibility limits. So there will be regulations added regarding that program, as well as guidance coming out from the compliance division. It is in progress, being developed right now. And then also just a note on the tire fees that effective January 1st, 2026, the existing tire recycling fee is going to increase from 80 cents to $1 per tire. And then there's also a new tire fee of $5 per tire that's imposed on the sale of each new tire in the state. What we are doing to that end is Form 100 is going to be updated so that both tire fees will now appear on the same form for reporting purposes. And we intend to publish a tax alert regarding that change a little closer to January. Briefly, this is the end of my portion of the presentation, so I want to thank you for your attention. Mind folks, put questions in the Q&A, please. so we can continue to add those to our guidance. And I will turn it over to my colleague who's going to show you a little bit more about Maryland Tax Connect and setting up sales news tax accounts. Thank you.
Thank you. Good morning. Before I get started, I'd like to provide a brief overview of Maryland Tax Connect for those of you that are not familiar with what it might be. Maryland Tax Connect is the Comptroller's online service portal for business taxpayers. The agency launched the new self-service portal in February of 2024 as part of our ongoing system modernization initiative, replacing the previous B-File web application. To date, we have over 170,000 users that are registered on Maryland Tax Connect and using Maryland Tax Connect to file business taxes. Maryland Tax Connect offers various services such as applying for a business tax account, viewing business tax account information, correspondence history, as well as filing and paying on Maryland business taxes. For anyone that is new to filing sales tax, they will need to apply for a mail-in sales tax account using the combined registration application. This is something that can be done now for those that need to prepare for filing sales tax. They can also start the setup for a Maryland Tax Connect profile on the portal. The link to complete the combined registration application is directly on the Maryland Tax Connect homepage, and that can be found the third link down in the quick links box. Once the application is submitted, a sales tax license is then mailed to the business with the Maryland Central Registration Number on it. They cannot start filing their sales tax until they have been assigned a central registration number. They'll also be mailed a Maryland Tax Connect letter that contains a unique PIN. That PIN is used to complete the registration process for tax administrators. They would need to enter in the PIN to link their tax account. From there, they would be able to grant a third party, such as an accountant, tax advisor, access to their account to begin filing Maryland sales tax on their behalf. They can also link their account and they'd be able to file and pay their sales tax directly from their Maryland Tax Connect profile. After the combined registration application is submitted on Maryland Tax Connect, it generally takes 3 to 5 business days for processing internally. So what we are advising those business tax filers is that they should allow about 7 to 10 business days for internal processing as well as United States Postal Service mail. Those filers, if they are brand new to filing Maryland sales tax, they do need to complete the combined registration application, as well as anyone that is a Maryland business taxpayer, but filing on a different tax type. Those filers still need to apply for a sales tax account using the combined registration application. And for any of those users, we do have additional resources that are available. We also have the previously recorded webinars that we presented to the tech industry as well as business owners. Those webinars contain a demo of how to complete the combined registration application and start the Maryland Tax Connect registration process. They can also visit marylandcomptroller.gov on the Business Tax Services page. On that page, we have additional FAQs. We have previously recorded webinars on how to use Maryland Tax Connect. We also have step-by-step guides and video tutorials available as additional resources for Maryland Tax Connect assistance. The Maryland Tax Connect homepage can be accessed by typing in mdtaxconnect.gov. We also have a callback feature that is available directly on the Maryland Tax Connect homepage, where users can select a link and schedule an appointment for a callback should they need Maryland Tax Connect assistance registering for a profile or navigating the portal itself. For anyone that needs to check the status on the combined registration application, they can email the central registration department at centralregistration@marylandtaxes.gov. And we will also continue to update the 2025 tax changes page on the marylandcomptroller.gov website. So please continue to check back on that. This does conclude our webinar for today. We hope that the information that was presented in the webinar has been found helpful. And please, again, visit marylandcomptroller.gov for additional updates and resources. Thank you and have a wonderful day.